Hello guys, how are we doing? Stock Saturday, and it's a slightly green week for me, up about 1%, about 4,500. Sort of been a little bit of a negative week, saved somewhat by Himax Technologies, as you can possibly see here on the Friday, really, up sort of around 10%. It was up slightly over 10% at points. We've had sort of a few other drops during the week. Had Applied Materials on Friday, sort of drop a fair bit. It's been very up and down with the semiconductors, and yeah, some sort of some small gains during the week, and then losses on Friday in the sort of gold and silver and crypto side. So yeah, very unusual. So no buys in here this week. Still sitting on the reasonable amount of cash, but you do get sort of £2 a day off this in the Trading212 account. So it's not the end of the world, I suppose. It's fairly okay amount of interest. But yeah, 1% sort of compared to the S&P is just over 1%. So near enough sort of on par with that for the week. Nasdaq has done a little bit better, 2.05%. Tech sort of still pushing on. You can sort of see on the 6 monthly, it just slowly grinds upwards to a fairly nice return, 13.5% in 6 months. That's pretty solid, 24% for the year. So yeah, that's how things have gone. So in terms of earnings, we got Hive Digital's results come out. Obviously, a fairly large position for me, certainly on the options side. And yeah, things are sort of looking okay on the balance sheet. I suppose decent amount of cash sort of to fund operations. They don't really use sort of that much cash. They tend to be still issuing small amounts of stock all the time to pay for everything, but they don't really have all that much debt. Sort of small term loan, 9 million of um, but they don't really have too much debt. They sort of have this little convertible loan, current portion of lease liabilities, the sort of term loan, yeah, quite a few sort of different types of loans, and then non-current um, loans payable, 9 million. So there's a little bit to pay, but not a huge amount of interest on that. But yes, the income statement is sort of where things, I would say, look a little bit worse, really. Revenue from digital currency mining, 26.6 million. A little bit of HPC hosting, and yeah, 22.7 million in operating and maintenance costs. Sort of just on that, with obviously a fair amount of depreciation, a little bit of fees on the HPC side, and that's just cost to run the business, or cost to actually run sort of the rigs themselves and everything. Then you have G&A costs, share-based compensation, and yeah, all the other sort of mostly non-cash changes. So gain and loss on sale of equipment, sort of one-offs, and then that gives you a sort of probably false net income for the period. They do at least put revaluation of digital currencies sort of below the line, if you like, and that is 76 million, because obviously Q4 was fairly positive after the Trump election. So yeah, then they give you this net income and comprehensive loss for the period of 66 million, and they've put that as 1 cent. So yeah, going back to the sort of official net income loss, 1 cent of EPS. And shares are up to a weighted average of 131 million diluted, so that's quite a lot. I sort of had 120 odd million in my sort of model. I haven't redone the model in a while. I didn't off the last quarter's earnings because well, things aren't looking super profitable even at current prices because the difficulty has gone up so much. So yeah, not exactly looking great. But yeah, they're trying to sort of paint over the not so great earnings with revaluation of digital currencies and, basically things sort of still not looking particularly good. They're expanding during this year, so they're at 6 exahash at the moment. They're saying probably about 12 by the end of Q2, so June time, and then 25 exahash sort of by September. But yeah, I keep saying I still think that's a poor time to be expanding. Could be sort of towards the end of the bull market. So it's not one that I want to be holding sort of much past this year. Hopefully, if we get a sort of decent move in Bitcoin, we might get a bit of a leverage move on the miners, and I would be looking to sort of sell out, average out, probably a little bit too soon, but just wanting to take profit on those. So we'll see where things go. Always like to highlight the TSMC revenue, good for the sort of semiconductor industry as a whole, as well as just them. Good for your Nvidias and AMDs and Broadcoms and all the rest of them. And yeah, revenue's looking good, 293 billion Taiwan dollars, year-on-year change of just under 36%. So very good. Looks like we're probably going to have another sort of fairly strong year. This just made me chuckle as well. I thought it was worth highlighting. People sort of, seems to be every year or so getting worried about the debt ceiling, and yeah, the Republicans have put forward a budget plan on Wednesday that includes $4.5 trillion in tax cuts and a $4 trillion increase in the debt limit so that the US can continue financing its bills. So yeah, they're looking to cut costs in various spots, but they're still going to run a deficit, and they're still going to need to borrow more and more. So we just casually increase 4 trillion to the debt limit, and I think that should take them above 40. Expected to sort of get there probably in a couple of years, even if nothing goes wrong, just with the deficit. And if something goes wrong, then they have to print a load, then could get there in a year or so. So yeah, I just thought that was worth pointing out. It generally means good for stocks, crypto, gold and silver. It's the denominator going down basically, rather than your assets going up. So Himax Technologies came out with their results. I think people were sort of basically just wanting to hear about the Nvidia silicon photonic stuff, more so than the actual earnings, but obviously they are sort of important. The business is going to be what it is for the next couple of years, really. It's not the silicon photonic stuff isn't really getting into place until sort of late or mid to late 2027. Other than that, it's just sort of test runs and small shipments, from what I understand. But yeah, people are still, it's sort of $10 stock price at the moment, or $10.80, and yeah, they're still sort of forecasting $3.40 potentially of earnings in 2028. So yeah, that's a little bit in the future, but if we sort of stayed at $10 for the next couple of years, then it would start to look incredibly cheap. So I think that starts to get priced in over time, and you wouldn't sort of have a forward PE of 3 years ahead, 2 years ahead, 1 year ahead. It starts to look a little bit more crazy. So I think that if we're going to get anywhere near there, that starts to get priced in over time. But yeah, the sort of this current business earnings looked relatively good. 237 million in revenue, 6.7% increase quarter on quarter, so significantly exceeding guidance, which is pretty good. Gross margin quite high, 30.5%. They're sort of noting that every quarter this in 2024 has exceeded guidance, so they sort of lowered guidance, before those earnings were released, but they exceeded those lowered earnings. That seems to be a way sort of lots of companies tend to work these days. You sort of water down the guidance during the quarter, and then come out with results beating that. They call it sandbagging. So yeah, that's they're doing a bit of that, same as the others, and sort of focusing on their non-core business, I suppose, that is becoming core business. The sort of WLO technology, Wise Eye, the sort of laptops and auto eye tracking stuff in the Dell laptops. That's pretty good. And yeah, sort of VR headsets and automotive displays, all sort of moving away from just your TVs and monitor chips. So just looking at their income statement, things are sort of looking reasonably good. I thought operating income up a fair bit, still needs to sort of rise an awful lot more, but yeah, 23 million compared to 16.6 last year, quite a bit above Q3 last year, so that's quite good. They still have more interest income than expenses, so that's pretty good. Brings net income higher than operating income, 24.6 million. So yeah, for a 1.9 billion dollar company, that is sort of, as I say, it does need to move up, but people are starting to price in this future. So yeah, not looking too bad. 14 cents of earnings, and shares sort of not really up a huge amount. They don't really do a huge amount of stock-based compensation, and they don't really do any buybacks yet, which you wouldn't want. Balance sheet looking okay as well. 218 million of cash, up from 194 last quarter. So that's pretty good. Inventories down to 158 million from 218. That had been sort of a headwind for a year or so. Yeah, inventories was 192 just last quarter, so that has dropped quite a bit, and they can start to get to more, selling on demand rather than just selling what they've got in inventory. Still got this restricted deposit and short-term secured borrowings sort of being netted off, and other debt doesn't really look too bad at all. Current portion of unsecured borrowings 6 million, and 28.5 million of long term. So that's down slightly from last quarter as well. So yeah, pretty good. Just noting some bits in their presentation as well. I do like their presentation. They point out obviously that they've been beating revenues, gross margin, and earnings. They did guide for 9.3 to 11 cents this quarter of earnings, or Q4 rather. So yeah, 14 cents was quite good. Been beating in sort of multiple areas of the business, and yeah, they have been noting this inventory level was sort of 410 million in Q3 2022, and has sort of come all the way down to 158 million. So that should sort of eventually start to bring a little bit more profit, as they're not just selling on inventory and having to lower prices. Basically, they can sort of sell, as I say, on demand. And they've given Q1 guidance, not super good. I don't think Q1 is a particularly good quarter, so decrease from Q4, 8.5 to 12.5%, but between flat and 4.6% up compared to last year. So not horrendous. Gross margin of 30.5% and net profit of 9 to 11 cents. We'll see if they end up beating this again. But if you were to sort of, if they done, they were guiding around this last quarter, and if they sort of did this again, then yeah, you'd be looking at an annualized sort of forward PE of about 20. So yeah, there's obviously room to move that forward. They're still saying, or the analysts, a couple of analysts are saying $1 of earnings next year. Moving to sort of $1.60 and then $3.40 in 2028. So you're still sort of getting some of that explosive growth priced in. They were never looking at sort of 20 PE for a long while. I think they are trying to highlight a lot of the other sides of the business to sort of show a bit of diversification going into automotive OLED, beyond LCD. Everyone, well, I think laptops, cars, monitors, and everything is sort of eventually going to be going OLED, which needs more expensive chips. And they're noting WiseEye, the eye tracking, and palm vein technology, which I still think sort of does sound interesting as a ID verification thing. So yeah, we'll have to see on that. And they announced the FOCI partnership for silicon photonics in June 2024. They're doing trial production this year with customer timelines undisclosed. They say it hasn't been changed by the DeepSeek disruptions. People are still going to be wanting the next potential advancement in semiconductors. TSMC are saying this is, one of the things that will push on, even though we're not on Moore's law anymore. I wonder whether this is being a little bit speculative, but they're saying this could be powering high performance AI and cloud and automotive and robots next. So yeah, I think that's just trying to say that it applies to everything. It possibly does if all chips are, going to be using this technology, and whether you'll get competition in, they're saying Himax currently has an exclusive deal, but I'm sure there will be competition eventually. So as far as economic news, there was nothing at all basically on Monday or Tuesday really, other than some people talking. Wednesday we got the US CPI, all sort of 0.1%, 0.2% higher than expected. Not particularly promising. Potentially sort of knocks expected rate cuts down a little bit. Some people are sort of saying that there could be more than the Fed are projecting, but yeah, with these numbers, especially core, higher than expected. Core year on year up to 3.3%. I know they go by PCE, but I can't imagine that's going to be dropping with core going up. So yeah, we'll see. But they want it. They keep saying they want it at 2%. I think there's debate about whether they actually expect to get there, or if they got to 2.5%, they would just say yeah, fair enough internally. And as far as talking, they would keep saying they're committed to 2%. But yeah, going up to 3.3 doesn't exactly look great. I think there's still people saying there's some lagged housing costs, still to come in, which would lower it. They've been coming down and they will continue to go down. So could be a bit of a surprise to the downside on inflation, which would be good. Jobless numbers all came in below expectations, pretty good. 1.85 million on continuing jobless claims, which is sort of the lower end of where it's been. And then you had retail sales, which I guess I'm not too interested in because I don't really have any retailers, but it's an interesting sort of indication for the US. All sort of came in weaker than expected for the most part. Month on month, 0.8% down, 0.9% on. Yeah, they have this retail control, retail sales, and last month's admittedly was revised up quite a bit. So yeah, revised last month's up, and this month is a little bit worse. Sort of overall, not really that important. You do have this GDP now figure. Sort of was they were expecting 3.9%, and it came in at 2.9, and now they've changed the expectation to 2.9, and it came in at 2.3 on Friday. So yeah, interesting whether they're sort of not expecting quite as much growth as previously, but this has sort of been flying around all over the place. But yeah, that's sort of certainly quite a bit down from where it was. And portfolio-wise, as I say, things sort of took a little bit of a turn for the worse on Friday. Certainly, gold had sort of been having a fairly good week, and Friday Friday morning it was up about $11-12, and sort of finished the day just over $50 down. It's basically down sort of all day, and so yeah, the miners sort of took a fair whack on this. I think they, Kua Mining sort of pushed into I think about $7.40 at one point on Friday, and finished up at $6.61. Equinox sort of, I think, was about 7.10, and that's come down. So yeah, took a little bit of a knock on that. Clean Spark and Riot are sort of pretty much flat. I think Riot's been doing a little bit better. There's a lot of talk about whether they're going to get an AI deal similar to Core Scientific, but yeah, we'll have to see. Hive still looks pretty awful. On the Interactive Brokers side, Pan American was looking pretty good. We're sort of in the high 25s, and it's sort of come down slightly, but it's in the green. It was sort of heavily in the red for quite a while. KGHM looking pretty good. Copper's been sort of trickling up for sort of a couple of months now, I think. So that's pretty good. Copper and silver doing, reasonably well. And on the option side, yeah, Equinox sort of quite a bit on top now, despite Himax gaining that sort of Himax gain certainly on Friday, pushed this up quite a bit, about 10,000 I think from last week. So that's pretty good, 1,450% up. So yeah, it's the one pushing my profit at the moment. But Equinox sort of in the green, first time in the green in a while last week, and it's sort of pushing a little bit further, but the crypto miners are falling back quite a bit. So we'll see. Still got a reasonable amount of cash in there. Bought sort of about 15 contracts of Hive. Sort of kind of expecting a decent Bitcoin move. Maybe later this month, maybe next month, but we'll see. So I might sort of go a little bit heavier in anticipation of that on sort of something like Hive or Riot, depending on price. But who knows? So leave your thoughts in the comments below, and like and subscribe. See you soon.